So the balance carried down is this 20. The closing balance is this. So 20,000. Then the closing balance will be on the opposite side. Balance carried down, it is 24,000. Then what was paid during the year? Bills payable, 186,000. So bank 186,000. Then we balance off. This side is greater than this side. So this 186,000 plus 24,000, it is 210. Then this side 210. This minus that, what you get is the credit purchases, but in terms of bills. So this minus this, it will be 190,000. So we come to our income statement. We record the credit purchases. This 392. Then the bills 190,000. $190,000. So we add 40,000 plus 392 plus 190,000. It is 622,000. Then we also have carriage inwards. We add it. So carriage inwards. This is like the transport that is spent on bringing the purchases to the premises. Carriage inwards, it is 25,000. So 25,000. Yeah. Then we less closing stock. Our closing stock is this 468. So 468. Like that. So this plus 25,000 plus 374,000 minus the closing stock 468,000 553. So that will be our cost of sales. So it's going to be 553. So cost of sales minus cost of sales, what we get is the gross profit. Yeah. So 2040,123 minus the answer. That's what we get. It is our gross profit 1487. Like that. Then we have to less the operating expenses. Operating expenses. So for the operating expenses, we are going to go back to our question. We have here in the cash book, the expenses we have wages salaries, rates, insurance, and then advertising. According to the additional information, they have told us there is a provision for bad debts of 29M to be made for doubtful debts. So that provision is regarded as an expense. So we can start with that. So we are lessing operation expenses. So provision for bad debts. It is 29M, but remember these figures are in 3 zeros, so we leave out the 3 zeros. Then they've told us depreciation should be provided at 5% on equipment, furniture, and fittings. So according to our question, we have furniture and then we have also equipment. So the figures are the same, closing and then the opening. So I've said we should charge depreciation of 5%. So we use this. Depreciation for furniture and fittings, and then for equipment it is all at 5%. So for furniture it is 12,000. So 5 out of 100 times 12,000. What you get is 600. So that is our depreciation. Then for equipment it is 240,000. So 5% of 240,000 is 12,000. So that is the depreciation. Then we continue with our additional information. They've said the following were owing, like they were outstanding or accrued. They were accrued at the end of the period. We have $60 million. It was for wages. Sorry, I skipped that. Wages 60M, then salaries 24M, legal costs 14M. Then insurance amounting to 5M was prepaid. So that is what we have. Then this side we have wages that were paid during the year. Wages, salaries, rates that were paid during the year, insurance, and then advertising. So I told you if an expense has more than one figure, you prepare the expenses account. If it has only one figure, you only take that. So for wages, it has more than one figure. It has this and it also has this. So we shall prepare its account. Then salaries, it also has 2 figures, meaning we shall prepare its account. Then legal costs, it only has 1 figure. So meaning we are going to write that figure the way it is here. Legal costs, it's 14M, like that. Then we have rates, it also has 1 figure. There is nothing about it in the additional information. So rates, rate it the way it is. It is 88,000. Then insurance, it has another figure here. So we shall prepare its account. Then advertising, it only has 1 figure. So we rate it the way it is here. Advertising 26 like that. So now we deal with the expenses that have more than one figure. So we prepare the expenses accounts. We start with the wages account. Wages account, debit, and then credit. So we do not have their opening balances because they were not given, but we were given their closing balances. So these ones are accrued, and we said accrued, the closing balances, we debit them. Then the opening balances we credit. So for wages, this was accrued 60M. So this will be in 3 zeros. So we debit it. It is a closing balance and not an opening balance. So balance carried down, it is 60M. Then what was paid during the year? We said all payments that are made during the year, when we are preparing expenses accounts, we debit them. So these wages that were paid during the year of 600M, we debit. So you write bank 600M. So this plus this, it will be 660M, like that. So what we shall put in the income statement is 660, like that. So we bring our income statement and we write wages 600, like that. Another expense we have is salaries. So we prepare the salaries account. Salaries account, debit, and then credit. We have the closing balance, it is 24M. It is accrued, so we put it this side, balance carried down, 24M. Then what was paid during the year? Salaries paid during the year, it is 330M. So all payments made during the year are debited. So bank 330, like that. So this passes, it will be 354, like that, 354. Then what we shall put in the income statement is 354,000. So we bring our income statement and we write salaries 354,000, like that. Legal costs, it only had one figure. Then we have insurance. So insurance account. So insurance account, it was prepaid. And we said if it is prepaid, the opening balance you debit it, closing balance you credit it. And this is a prepaid closing balance of 5M. So we are going to credit it. So balance carried down, it is 5M. And we said all payments made during the year are debited. So this insurance that was paid during the year of 16M, we are going to debit it, bank 16M. So this side is greater than this side. So 16M, 16M. 16 minus 5, what you get is what we shall put in our statement of profit or loss, or the income statement, which is 11M. So we bring our income statement, we write insurance 11M. Like that. So what next? We get the total expenses. $29,000 plus 600 plus 12,000 plus 14,000 plus 88,000 plus 600 plus 660,000 plus 354,000 plus 11,000. What we get is the total expenses, which is 1,195,200. So we are going to get gross profit minus the total expenses. What we get is the net profit. So gross profit, which is 1,487,000 minus the answer. That is our net profit of 291,800. That is the net profit. So that is how we prepare the statement of profit or loss, or the income statement, using incomplete records. In the next video, we are going to look at the balance sheet, or the statement of financial position. Thanks for watching.